Hello, everyone. My name is Natalie Neto. I'm a partner at Walkers, and I'm delighted to be here to talk to you about the transformative power of DeFi and some of the risks and rewards in relation to these protocols. I won't be doing that alone, and I'm delighted to be joined by an excellent panel today, and I'll pass over to Jordan to begin the intros.
Thank you. Jordan Momtazi. I am a core contributor at Synthetix, which is a derivatives liquidity protocol, a decentralized finance protocol, and also a co-founder of BlockEarner, which is a custodial and regulated interface for the mass market to access crypto yield.
Great. And Philippe?
Hi, I'm Philippe Bekhazi. I'm the CEO of XBTO, crypto finance enterprise that caters mostly to institutions, and StableHouse, which is more of a retail interface to get people onboarded into crypto and keep them there so that they can trade, earn, and pay in the digital ecosystem.
Great. And Ajit?
Hi, I'm working on the Aave Arc product, which is the institutional, permission platform for the Aave protocol community. And I also am on the European board of the DeFi Alliance, which is a global community of decentralized finance entrepreneurs and investors.
Excellent. And finally, Denis?
Hi, I'm Denis Pitcher. I spent the last few years as an advisor to the Premier on crypto and fintech, and I'm also a director of Bittrex Global.
Excellent. So why don't we get stuck in? We've heard a lot about the potential power of cryptocurrencies and the blockchains that they run on. In reality, I think to date, this has mostly involves financial speculation. But does DeFi present the...
So I think the basis of the question is, there's speculation in the industry, and the DeFi is potentially like a real use case. Firstly, I think speculation is usually quite necessary for industries to kind of thrive. I think when you have speculation, you have capital. When you have capital, you have interest, you have eyeballs, you have talent that, whether for altruistic reasons or not, end up kind of being interested and kind of end up spending time in the space as opposed to somewhere else, right? As opposed to in traditional tech or in banking or something like that. So I think in general, as like a structural thing, I think you can't have like game-changing technologies and revolutions in technology unless you have some of the downsides as well, some of the speculative elements. So I think as a starting point, I don't think that speculation is necessarily a bad thing. Sort of structurally, but in terms of the specifics of DeFi, I think, yeah, absolutely. I think DeFi is very real. DeFi is quite easy to understand what the use cases are. There's a lot of applications that are more efficient potentially with sort of autonomous applications, but also there are a lot of applications that simply don't exist in the existing financial world, right? They're kind of the way that these products are being built, the way that they're coming together. There's a variety of products that simply don't exist outside of decentralized finance.
Totally agree. And if you think about how Bitcoin started, it started with just people trying to figure out what the value of a Bitcoin was. And there was no other utility in the beginning than basically speculation. And to this day, I think, to a certain degree, the speculators provide a very important utility to the network, is that they figure out what the price of Bitcoin is for everyone else at any point, at every passing second, and that's really critical. And in finance, if you think about finance, just over the millennia, it's always been underpinned by a certain degree of speculation. It's a human trait. So I think speculation is definitely not a bad thing. Speculation is really a core component of the space. If it hadn't been first, it would have been second or third. It would have been there in the mix anyways. So I think it's a good thing to have speculators, because speculators means that there are people willing to take a risk. And when you're an entrepreneur, effectively, when you're starting companies, you're speculating. you're speculating that your company is going to be successful. And so I think it's a core and critical component of what makes DeFi today, and obviously what made Bitcoin and all of the other, sort of blockchains out there.
Speculation, I think, is also something that has really led technological shifts in the past. I mean, when you look at the introduction of railroad networks, there was a tremendous amount of speculation involved in people believing the impact that core infrastructure would have in places like the United States in crossing large, really undeveloped land, and wondering what that was going to do, what the impact was going to be. Similar with the introduction of the internet, the communications that we're using today for fiber optic cabling, the global fiber optic networks wouldn't really exist if there wasn't significant speculation on the future value of the internet. It did take a long time after the speculative bubble and boom of the e-commerce years of the late 90s before we actually started seeing this global proliferation of video conferencing that we take for granted today in this age of COVID. Speculation is something that very much follows the technological hype cycle. People get very hyped up on what the future potential is, and they're willing to invest in and experiment in that technology, knowing that the long-term vision will have payouts for those who pick the right investments, but also knowing that in some cases that you're not picking the right one. And it's that risk-taking that really sets the foundation of these technologies.
And thank you, everybody, and apologies I lost you there for a second. Thank you for taking the conversation along. I think what you're saying is super interesting. But if I can come back to DeFi as it's in the sort of state of it that it is today, do you think it's fair to say, or to start the conversation, I guess, around DeFi in defining what DeFi really is and saying, looking at the protocols we have today, are they truly decentralized? Maybe Ajit.
Yeah, I can take this. So I think, the lame answer is that decentralization is a spectrum, right? And but that's a very convenient apology for centralized systems. By that definition, even SQL Server is decentralized. But so we don't want to go down that path. Now, I think the question is, what's the minimum level of decentralization, and what are the goals of decentralization, right? So the first thing is, so there is a legal aspect to decentralization, right? Which is if you can take a person or a company to court and shut down a protocol, then that's not quite decentralized. If 5 guys can coordinate and reboot a blockchain, I wouldn't say that's decentralized, right? If there are 7 validators on a blockchain and all of them are owned by one guy or one company, then I don't think we can call it decentralized. So decentralization, there are 2 questions here. One is the Hinman doctrine, which is sufficiently decentralized. So there is no legal standard right now for what is sufficiently decentralized, right? So Ethereum is sufficiently decentralized, but we don't know what else is. So I think at some point the courts will rule on that, and we'll find out what that actually means. But there is a higher level of decentralization, which is kind of which is a defense against the tyranny of the state or geopolitics, and that's really where you can't really shut down a network like Tor or Bitcoin because there is no one to take to court, and there is no one to sue. So I think that's kind of the ideal level of decentralization where Bitcoin has more or less got to. There was a big China, ban in China on the miners, but nothing has changed. Bitcoin is running just fine. I think that's the level of decentralization we all aspire to. And then there is a minimum level which the courts and the regulators are yet to define, and we'll find out what that is, right? But I think from our perspective, we've been very aggressively decentralizing over the last year. We gave up keys to the Aave protocol last September. Now there is, there is progressively we don't have any control of any of the protocol. Now the Aave Arc market is being launched, and that's that's not where Fireblocks are working with us. They're working with the Aave governance. So the key to DeFi is governance, and as long as individuals and companies are not extracting value or unfairly or having an extraordinary amount of influence on decision making. I think that's kind of where we want to be at a minimum, and then the Hinman level of decentralization will be defined at some point, and the censorship resistant decentralization at the level of Tor is where I think we need to go in this space.
Yeah, that's very interesting, and I think some good points made there. What about you, Jordan? What's your view on the current state of decentralization?
Yeah, I would definitely agree with the points that Ajit mentioned. I guess there's sort of two ways that I look at decentralization, sort of in a basic way, and one of them is looking at it from a contract level. So is something immutable? Is something basically unupgradable in a sense at a sort of baseline level? And then there's the decentralization of the governance, right? So yeah, it's about the coordination of things like upgrades and decisions about what products are released, what's not released. So you can kind of go down those two paths separately, and they can be quite separate. So Synthetix has always been very quote unquote easy to upgrade, but our focus has been on decentralizing the governance of it, right? So we use proxy contracts, which allow us to upgrade very quickly, because our product is very complex and requires a lot of updating, and arguably hasn't got the product market fit that Aave has. So we're constantly looking to sort of make decisions about what we need to do next. But in our case, decentralization comes and censorship resistant comes in the fact that there is no single group, there is no single person that actually makes these decisions. We have various DAOs that make different decisions, and then those inputs go into the ultimate product and sort of the end result.
Yeah. And Philippe, do you have any comments on what it looks like to be decentralized?
Yeah, I mean, I have so many comments, but the thing about decentralization is very difficult to obtain day one. When you start a project, it starts with a core nucleus of people that have an idea, right? It doesn't start with 1 billion people. Oh, we all have the same idea at the same time. We're going to figure it out. It starts with usually one person who has an idea and he wants to do something decentralized. And the actual steps taken to get to that decentralization can take more or less time, depending on how quickly the community can get behind that idea. And so that's really the interesting sort of path, right? And that's what the SEC and all these regulators are looking at, is like, what is enough time before the protocol is started? Can you sort of go after someone to say, this is a security, this is centralized, this is you have undue influence on this protocol, or you never had the intent to decentralize it. And that's really something that we all kind of grapple with when we get involved in DeFi, when we get involved in these new protocols, is really like, right now, is this one person, is he going to benefit with, is he going to rug pull? Is he going to disappear? It's going to take all our money. How do you make sure that it's really, really decentralized, in a time period that is reasonable? And that's what I think is really interesting too.
And I'd like to talk a bit later on about the sort of approach to regulation, but you've touched upon a couple of important points, which I think are what are the risks around this protocol, the decentralized finance protocols. And maybe if I can just throw it out to you to sort of discuss what those risks can be, and how we might sort of protect participants in the protocols, such that we can go to talk about regulation, but to give that sort of layer of protection. What's out there currently? If I can take that to Denis.
Sure. So I think when we're talking about moving financial products or financial transactions onto kind of an internet layer that we're calling DeFi, it introduces a number of different considerations. I mean, you're now relying upon protocols like Synthetix and Aave that you can actually transfer this money around. But in many cases, that requires decision-making powered by things called oracles. So you're relying upon a source of data that may change or adjust the rules that govern how your money is actually flowing. So who supplies that information? How reliable is it? Is a good example. Other ones are whether or not the governance structure, like who controls the keys, I think was another one that came up earlier. Is there an appropriate governance structure that can mitigate and manage changes? How are the changes audited on the way in? What are the flows into and out of these protocols, and how are people really managing the associated risks, particularly if you're dealing with someone else's money when you're interacting with these? Because in many cases, it's enthusiasts or professionals that are leveraging the power of these DeFi protocols to be able to actually do lending and do trading on them.
Right. And, that's the intent, isn't it, to go to the masses? So it seems to me that currently we're in a situation where it's sort of buyer beware, caveat emptor, and the reliance on risk disclosures seems to be significant. So are these protocols adequately describing the risks to the participants of participating on them? Do you think that's sufficient, Jordan, as a protection?
I think it's a good start. I don't know if it's sufficient. I mean, you could argue it might be sufficient at the moment for the size that DeFi is now, but certainly not sufficient for getting to scale to the scale that we would like to get to. So, I do think that there's intermediaries maybe that can help kind of filter risk, communicate risk, even interfaces that are centralized can potentially take on a lot of those gatekeeper type roles in a good way. So like if you want to interact directly with the protocols themselves, then there's at the moment obviously limited capacity to sort of protect end users. It is up to the end user to kind of filter that type of information themselves. But if we get to the sort of the next 100, 200 million users, I'm sure that they're not the users are not going to be using MetaMask to interact with Aave directly. I'm sure that's not the case.
Right. And Philippe, do you have any sort of thoughts around how best to protect consumers? I mean, you sort of grapple with these sort of concepts in your current capacity right now.
Well, we certainly do. I mean, StableHouse was built for exactly that reason, is to be an interface proxy, a sort of someone to shepherd people who don't necessarily understand the technical risks, the market risks, the legal risks, the reg risks, all of those risks that decentralized finance kind of brings. Obviously, you're getting a lot of upside from decentralized finance, and there's a lot of like downside that's sometimes hidden. The thing about it's like the internet when it started, and decentralized finance is basically similar, is that there's nothing really that stops you from interacting with any one of these protocols. There's no law that will say you cannot interact with them. And so the regulator is a bit, powerless because it's all really technology, and there's no one, as someone alluded to, there's no one to sue, there's no one to go after. A lot of times, I mean, sometimes obviously it's a bit obvious, but in a really decentralized situation, you're on your own. And so this is something that is going to be very interesting to see how it progresses. I certainly don't have an idea today that would say, oh, we can do XYZ to protect the end consumer against, interacting with a sushi, fork that just launched. Yeah. And no, there's nothing, because that's the whole point of decentralization. That's the whole point of digital assets, is that they are uncensorable. And if they're censorable, then they're not decentralized. So we're talking about something else.
Just a couple of thoughts on that, right? So Philippe, I don't think digital assets are uncensorable in the current state. I mean, that's the ideal. That's where I think we want to get to. Most DeFi protocols are certainly not uncensorable. Hester Pierce invented the term DINO, decentralized in name only. and there's quite a bit of that out there.
That's right.
So, you know, I think that's the ideal state. That's where we want to get to. And at some point, there needs to be clear demarcation between the Dinos and the DeFis, right? And that's kind of good for the space, because what you don't want to happen is you don't want, you know, the Aaves and Synthetix of the world to be mentioned in the same breath as I don't want to name, you know, the Dinos. So I think we need to set higher standards within the community and kind of lead from the front on that, which is kind of what we're trying to do. So, you know, at some point, BitTorrent, right? Decentralization didn't start with the blockchain. That's kind of the main purpose of blockchain. If you're not decentralizing, then you can do a lot of stuff with APIs on a cloud and a database. You know, so decentralization on the internet is an old idea. We've had Napster, we've had BitTorrent, and we've had, you know, Tor and other technologies. So I think there is sort of historical context for where we need to be, but we're not there yet, right? And so in terms of consumer protection, I believe that decentralization actually protects the consumer at some point, right? Because with centralized entities, there is complete lack of transparency. 300 billion Evergrande just went down. And, you know, I don't know how that actually protected the consumer in spite of all of the rules, the weight of the rules that was imposed on the Chinese banking system. I don't know how Lehman protected or Archegos protected the consumers, or the accredited investor rules protect the consumer, or Sarbanes-Oxley protects the consumer by locking them out of, or KYC, right? I mean, it makes it impossible for banks to serve the marginal consumer. So I think consumer protection is poorly understood. We tend to protect the consumer from actually making money, but we never protect the consumer from taking a lot of risk on, you know, some of the speculation apps and so on and so forth. So maybe I think consumer protection needs to use the same technology that's being invented with DeFi, and we need to use the technology. I would rather, you know, if the policy institutions and regulators were on the DAOs and they were essentially getting a grant to build some cool reg tech with the DeFi protocols and communities that are building a lot of great tech. So instead of just writing paper-based rules and saying, guys, you can't use DeFi, you can't, you know, use Bitcoin, we will lock you out of making any money, but we will not lock you out of taking any risk. So I think this is time to sort of redefine consumer protection a bit in terms of all the opportunities also, and not just in terms of the risk. Right?
Yeah, well,
So
good points, all good points. And I think you touched upon, you know, not only the risks there, but the rewards. And you know, since we're sort of looking at protecting them, obviously that is the role of the regulator, one of the roles. And so it might be a good time to look at the approach being taken internationally by regulators. I think in Bermuda, we're lucky we have a risk-based regulator who has the flexibility to look at the nature, scale and complexity of the business, and can really focus on what those risks are and how best to protect them. And having discussed with our regulator, I think they take a sensible approach and look at sort of how those smart contracts are operating, and whether the system is built to be audited internally on a regular basis, etc. You know, sort of really looking at how to move towards decentralization. And I think that's a good approach. What about other approaches that you've seen, and what's your thoughts on what would be the best regulatory approach to these DeFi protocols? I'll go to Jordan again to start the conversation, but I'd love to hear from all of you.
What's been some good approaches? I mean, generally the hands-off approaches have been the best, funnily enough. You know, I think, like, I'm here in Australia at the moment, and Australia's been fairly hands-off in terms of regulation. It doesn't mean they're not thinking about it. It doesn't mean that, you know, potentially there's not a lot of regulation coming, but, you know, in this sort of phase where there's a lot of ambiguity about what's happening, about where the space is going, you know, for whatever reason, they haven't been very structured with sort of their approach. I think it's also easier for you know, smaller economies. I mean, Australia's not a small economy, but it's also not the US, right? It's not the UK. So it's easier for smaller economies to sit back a little bit and wait to see what the bigger regulators are doing, and sort of what the bigger economies are doing, because potentially it becomes a competitive advantage. Yeah. But I think generally, I think the countries that have gone forward really aggressively, very quickly and early, I just don't see those as good outcomes for their populations, their users, their consumers, because clearly, the technology is not going away, right? And sort of the output of the technology, the benefits of the technology are just going to get squeezed into these other markets where the regulators are, at least up until this point, being a little bit more hands off.
Yeah, I think from sort of my sort of routine interaction with sort of the Bermuda regulator, which went sort of early doors, I think there are some benefits to it if you get it right. If you have the opportunity to build something that's fit for purpose rather than sort of square peg round hole, I think that approach can be right. Philippe, what's your thoughts? I know you sort of regularly interface with regulators on these matters. What do you think is the right regulatory approach?
Look, you need to understand the technology can't be 2 years behind the tech, and this is what's happening right now. The regulators are trying to play catch up with something that they don't quite necessarily understand. They can't really get their hands around, and so it's difficult. That's where we are right now. We're kind of in a situation where there's a little bit of this, and not because the regulators look at things in a very different way than we look at things. I mean, I started in crypto in 2011. I started XBTO in 2015, and I've always been self-regulated, right? I've always been thinking to myself, what can and what I shouldn't do. The can't is really like, there's no legal framework. There's nothing I can follow. There's no rules. So I should technically be able to do anything I want. But, there's the ethical aspects. There's the legal. Generally, like you're taking from what's in existence already, which may not be quite adequate, right? If you're taking from the banking system, like KYC AML, right? For example, KYC AML has been in existence for quite a long time now. It's gotten to a point where it's really built on sort of the banking infrastructure. And now we're trying to say, well, let's just put it onto the blockchain. But really, that's not technology that's built for the blockchain. And really, it's going to have to evolve. And it will evolve, I think, with time. So I think the answer to regulation is technology. The regulators will have to almost decentralize themselves and sort of virtualize themselves into the blockchain in a certain way. I don't have the answers to it. I just know that I have I interface all the time, as you know, with the regulators, and sometimes we just don't speak the same language. I want to go here, and they want to go there, and it's business versus regs, and a lot of time the users want a product that the regulators are trying to define, which have no sense. And so that's those are things like options on crypto, or that have no ability to be regulated right now in any certain way. Even just derivatives on crypto, like FTX has to basically, and I'm just saying FTX, but all the other futures exchanges out there have to kind of sort of ring fence certain, large populations in large countries, just because it just doesn't work with that current state of the regulation.
The KYC, yeah, absolutely. Ajit, please let me know what you think about this.
Yeah, so I think, we have some history to this. So there is the Bill Clinton Al Gore do no harm doctrine. I think that's the first thing, right? When you are sort of looking at early stage tech, the first thing, I mean, back in 94, 95, right? You would buy stuff on the internet, and there was no SSL. So credit card, no secure sockets layer. So you would send your card number over to some dude in California, and your goods never arrived, right? So, I mean, but if we had shut down the internet because, there were accidents on the internet, then we would not have what we have today. So we would not have jumbo jets if we shut down the space shuttles and jumbo jets the first time someone died. So I think, the first thing should be to do no harm. There is new tech being built. There's a lot of innovation in this space, and we need to start thinking about the opportunity. The second thing is, sure, there is obviously the consumer protection aspect is very important, and but the way to do that is not to apply the rules that were written in the 30s for a market in a century later. So what Philippe said is exactly right. I think maybe regulators need to recognize that they're usually 60, 70 years old, probably older than me by 15 or 20 years. And, maybe we don't want to determine the future of our children based on what we learned a century ago. So it's time to, first of all, do no harm, and then apply the same tools and work. I mean, why can't we have a constructive dialogue? Why can't, the policy institutions actually participate in the communities. Why are they not in any of the developer conferences where all this cool stuff is being built? So I think it's time to engage, right? And as opposed to doing tiger parenting and saying, no, you can't be on the Xbox because that's not what I had when I was growing up.
Yeah. And Denis, you've sat really in the room trying to sort of figure out from a policy perspective what the right thing to do is from a regulation. What are your thoughts on this subject?
I think it's worth looking at the path we've charted so far. I mean, when you look at Bitcoin, for example, how do we regulate it? A lot of the focus ends up being on the bridges into and out of the protocol, as opposed to trying to say shut down or try and constrain the protocol itself, because the more decentralized it is, the harder it is, as we discussed earlier. So it's very much looking at that perspective of, as you start getting critical mass, typically with any technology, as we go back to the history of decentralization and the internet, means that individuals aren't necessarily interacting directly with the protocols themselves. They're using apps, they're using other means, other bridges into and out of them. Like many people today will buy Bitcoin, but not necessarily directly on the Bitcoin network. So what are those bridges that they're using? Where are the protections and the risks managed for those kind of bridges? Because really it's those people that need more awareness and protection. A lot of people that are interacting directly with these protocols are kind of buyer beware and taking on their own risk, knowing just like if they're going to hold their own keys, that they're ultimately responsible. But if you're relying on someone else to hold your keys, well, then that's kind of a different discussion. And that's where I think we need more focus on those sort of risks. When you're expecting someone else to do their job to help you with this, that's where people can get frauded. That's where people can run into issues. And that's where I think a lot of the concern is.
Yeah. And Ajit, you mentioned something earlier, which I think is bears a new way of thinking as well. So we have sort of the accredited investor regime that again is for the traditional markets really, and served its purpose well there, arguably. But trying to use that regime in DeFi doesn't work, as you say. Just because you have a lot of money doesn't mean you necessarily understand what you're doing.
I mean, sorry to interrupt, but moreover,
no.
back in '97, an average IPO was between $100 and $500 million. Now an average IPO is in billions, right? So we are locking out the retail investors for 8 times the return. So back in 97, 98, 99, I could actually get into a lot of IPOs. And I mean, fortunately, I'm accredited now. And then I wasn't. But now Grandma has not a shot of actually, and we're leaving all the money on the table for the institutions. So obviously, and the whales, I mean, the fiat whales and the rich people. So accredited investor rules, and the SEC has acknowledged this, don't work. They're counterproductive. The same thing applies to the cost of KYC and AML compliance, right? So I think there's no point in protecting the consumer from actually, making money, because that's how we are increasing the inequality in the society. So at some point, the whole rule book needs to be rewritten, and it's about time to do that with the better tech we have.
That's a good segue into another question. So what sort of tech solutions are out there that would assist, whether it's soup tech, reg tech, to help sort of put systems in place to future-proof these protocols? And I'll throw this out to anyone.
Yeah, we don't want to future-proof the protocols, right? I think we need to let these evolve because we are so early in this tech, and we are so, I think this is a real great space for creativity. But to answer your question, right? Ultimately, investors and developers respond to markets. So Chainalysis, CipherTrace, there is a ton of, multi-billion dollar startups just focusing on the AML part of the market, right?
Yeah.
I think if regulation is a market, so I think if regulators ask the right questions, then they will get the right answers and the right tooling. So, but we're not asking the right questions. We're just asking, how do we punish people? We're not asking, how do we incentivize people to, serve the consumer better?
Yeah. Philippe, what's your thoughts on what sort of other sort of technologies that you've seen that might help?
Yeah, look, we'll have to look at it at buckets. I mean, there's the KYC part. Is KYC relevant to the space? Yes or no? Obviously, there's a lot of philosophy behind this, and there are a lot of people who will not agree with one another. it's not quite clear. AML, obviously, CipherTrace, Elliptic, all these companies are addressing, where did this money come from, where is it going, and sort of mapping on a public blockchain, which, that technology itself is evolving potentially to places where it becomes much harder to trace. So we don't really know. And that's the point about being, it's hard to regulate something that's moving so quickly.
Right.
It's hard to trade something that is very volatile in the same way, right? I feel, in a way, I feel for the regulator, because they are just not tooled properly to handle this, because it's just, and that's sort of the nature of technology in general. There's a huge J curve in terms of technology in the last 20 years. And it's very hard to follow. We're going to space. We're putting, we're talking about mining asteroids. We're developing vaccines in 6 months. Things are just like, for good or for bad. It's very hard to follow. I think, we're following all of this technology in all of these different buckets, whether it's AML, KYC, or just generally like making sure that that you can follow the rules in every jurisdiction, which is another issue also, is there are so many jurisdictions out there.
We're screaming out for international standards. And, so thank you. And I think we sort of talked about the ways that we can regulate the space. I guess I have a question. What would be the benefits of regulations to these DeFi protocols? Isn't that sort of the antithesis of what they're supposed to be about? What do you think, Jordan? Is there any benefit to regulation in the space? And what would you see? What is it?
Yeah, good regulation is definitely beneficial. There's no doubt that having some guardrails, some kind of structure around what can and can't be done is a benefit. It just depends at what level, right? At what layer or level are you going to introduce that? So, going back to your previous question, I think it's less about the actual tech. The tech can always be built, right? Yeah. But it's actually about asking the right questions, as Ajit said. It's like, if you don't ask the right questions, then the tech won't be built, right? And that's what it is, right? And the other thing that he mentioned was just stay away from the protocol. The protocol is the core of what's going on here. That's where the Wild West should remain to be the Wild West. The market will determine which ones are going to win and which ones are going to lose, right? You can't have something that's not built correctly, is a scam, is not good for users. You can't have that thing scale to 10 million people, right? Or 100 million people. It's just not possible, right? So, the market will decide what protocols win and what protocols lose. And then you have to ask these questions around the edges of those protocols, the on-ramps, the off-ramps, the gates, and potentially other ways of interfacing with these things. But yeah, I just don't see trying to ask Hayden from Uniswap, Uniswap needs to be the protocol needs to be regulated. That doesn't make sense. It's impossible. It's literally in the design for it not to be regulated. So even if he wanted to, he doesn't know who's using the protocol. It's kind of it's the wrong question, or it's kind of the wrong demand.
Understood.
So,
Ajit.
Yeah, just one thought on that, right? So I agree with Jordan. There is enough sufficient case law in the US that essentially determines that software is speech, right? And there is free speech enshrined in the US Constitution. So regulating software doesn't make any sense. Of course, if this infrastructure and software is delivered by fintechs and the access, is to this internet Web3 infrastructure is delivered by institutions, then of course those endpoints will be regulated. There will be adequate disclosures. There will be suitability requirements. There will be all sorts of KYC, transaction monitoring, this and that, and then that's kind of how it should be, right? So the endpoints, even on Web2, have various rules, right? So Amazon pays taxes, hopefully. Well, it doesn't, but maybe it should. And, so there are rules and regulations around the endpoints, and I think that's so we don't need to reinvent this. And then the other thing I think people need to determine is if we are trying to protect the consumer or are we trying to protect the banks, right? And so hand on heart, right? What are we actually trying to achieve? Are we trying to build the future, or are we trying to protect the past? And I think at some point we will have to get on with the program, right? Because you can't just stop the tech. Tech markets follow tech, and then rules have to evolve around the tech. That's the innovation that's happening.
And it's exciting innovation. So perhaps I'll end there. Maybe if you can sort of tell me something, all of you, that you are excited about. This topic is called Transformative Power of DeFi. What do you think are the potential rewards that we haven't touched upon? Over to you, Philippe, picking on you.
Yeah, well, I think at the core, right, we're trying to democratize sort of the access to finance, the access to opportunities. There are still many, many unbanked or underbanked people in the world. And I think the idea, and I think it's shared by the community and the crypto and digital asset community, is that we want to make sure that everyone has the right to a bank account or a blockchain address, to be able to receive and to express themselves financially, to be paid for the fruit of their labor. And so there's there are whole continents that are really, really underbanked. And I think, KYC ML is responsible for most of that. It's very expensive for banks and corporations to just comply. And that's what I see where there's huge value add is to find a solution to that part, whether it's fixing it, eradicating it, or just putting some technology to address it in the way that it is today.
What about the idea of the sandbox, though? Because having a regulated environment where you don't have the full burden of the regulation. Most sandboxes still require you to have that KYC AML layer in place anyway. And I take your point; it's extremely costly. But perhaps we could look at sort of the sandbox environment that we've got today, and Ajit shaking his head, so I'm going to ask him why not.
FTA sandbox, while truly laudable in the UK, hasn't quite worked, right? And the SC has acknowledged it and kind of restructured it to make it relatively open. Now you could think of all of DeFi currently as a sandbox, right? This is sandbox real money. And then you could set up some rules that say, look, when you deliver DeFi through these endpoints, like Fintech integrating and so on, then grandma should only have X level of exposure because of suitability and not more. But if you're a crypto whale, then you can have an arbitrary amount of exposure because you have the ability to take that risk. And so DeFi is a sandbox right now, right? We are a small rounding error, 150 odd billion on the total 90 to 100 trillion of US equities and debt. So I think this whole risk conversation is way far ahead of where the reality is, right? I think most of the so sure, where we need to get to, I totally understand, but it's not like that my neighbors are using DeFi very actively just yet. And I think this is a healthy scenario because at this level of maturity of the space, I think it's really important that we let the innovation continue and the technology scale, and at some point, and now with solutions like ARC and others, we will be in a position where we can deliver DeFi to the individuals. Everyone.
Well, that's a great note to end on. And, I know there's a lot more to be said around this subject. And so if you want to continue the conversation, we'd be happy to join you in the sessions room for a live Q&A. But for now, I'd like to say thank you to all the panelists. I could talk about this forever. And, I'm truly excited about what's happening in the space and appreciate all of your efforts and discourse on this subject. Thanks so much. It's been great, and hope to see you and shortly in the Q&A session. Thanks.
Thank you so much.